In this video, we're going to learn how to read a company's balance sheet. It's an important document because it gives us information that can help us to determine how much a company is worth. Now, there are two main parts of a balance sheet, and they act together like two sides of a weighing scale whereby both sides must be in balance. Hence the name balance sheet. This side of the scale can be summarized as what the company owns. And here we find the company's assets. Now, what are assets? Basically, assets are things or properties that the company owns that has value. And what do we mean by value? Basically, it means that these things, these properties can be used to make money for the company, or they can be sold for money. And on the other side of the scale, what we have is what the company owes. And here's where we find things like liability and equities. Liabilities are what the company owes to its creditors or to other people. Let's say the company borrowed money, took a loan from a bank, for example. This would come under liabilities. Equity is what the company owes to its owners. So what we find here basically is what belongs to the shareholders of this company. Let me give you an example. Let's say I want to buy a house that's worth about $1 million. So in order to pay for this house, maybe I take a loan of like $800,000 and I pay the rest in cash. So on my balance sheet, what I would record as asset is the $1 million house. And that's because the $1 million house has value. It can be used to generate money for me. Let's say if I were to rent it out, or if I were to sell it, I can convert this house into cash. So right now this house is worth $1 million. So I record it under my assets as $1 million. Now on the other side of the scale, my liability will be $800,000 because this is the amount that I owe to the bank. That will make the equity portion the remaining $200,000, which I paid for in cash and therefore is officially my ownership of this house. Alright, so to illustrate how to read and understand a balance sheet, we're now going to take a look at a real balance sheet. We're going to look at the example of Microsoft. Okay, so here we have the balance sheet for Microsoft. The first thing that we notice is that this balance sheet is in millions of US dollars and the fiscal year ends in June. So that means that all of these numbers here on this balance sheet are as of June for that particular year. The balance sheet is made up of two sides. One side is the assets and the other side is the liabilities, and well, this word should be stockholders' equity. For every year, we can see that the asset side of the scale balances with the liabilities and equities side of the scale. Alright, so now we're going to go through in more detail the typical things that you would see in a balance sheet. Okay, so we're going to begin with the asset side of the balance scale. And earlier we've established that assets are things or properties that the company owns that has value and can generate money for the company. So assets can be further divided into two kinds. One is your current assets and your non-current assets. So current assets basically are short-term assets that the company owns that can be converted into cash on a much quicker basis. So cash in itself, being already cash, that normally comes under your current assets. So we see that Microsoft as of 2021 June has about $14 billion in cash. They have short-term investments of about $116 billion. Also included under current assets are things like receivables. Basically, receivables are sales that you have already made but you have not collected payment for. Inventories are like the items that you have in your warehouse but have not been sold yet. I mean, in this case, Microsoft sells software products. So these are the software products that they've already made but they have not yet sold. Current assets are things that are of value that you can convert into cash on a short-term basis. So next we have your non-current assets, and these are things that you hold to help you to generate money for a long term. So these are things like, for example, your factories or your machine, your equipment to help you to create or generate your products and services. These are things that you're not going to be selling anytime soon. You're not going to be converting them to cash on a short-term basis. So they come under your non-current assets. Then we see this item called accumulated depreciation. Basically, depreciation is an accounting concept whereby the cost of buying assets can be apportioned over the number of years that the asset is used for. Now, this is something that's just good to know. If you're interested in finding out more, you can go research about that yourself. Also, under non-current assets, Microsoft has other investments. They also have goodwill and intangible assets. These are things such as like intellectual properties or trademarks and copyrights that Microsoft perhaps owns. So the value of all these assets are added together to give the total asset figure. Alright, so now we come to the liabilities and the stockholders' equity portion. So earlier we mentioned that this side of the scale is what the company owes. So liabilities is what the company owes to external parties and creditors. Under liabilities, they're also divided into current and non-current liabilities. Current liabilities are amounts that the company owes that is going to pay off in the short term. So we see things like short-term debt. Accounts payable are things that you have received goods and services from your suppliers and your vendors, but you have not paid them yet. So this is the amount that you owe to your suppliers and your vendors. Taxes payable basically is tax that you have not paid to the government. Non-current liabilities are what the company owes, which they're not going to pay off in the short term. Things like long-term debt. Perhaps they borrowed money from the bank or they sold long-term bonds. These are what the company owe, but they are not going to be paying it off in the short term. And in terms of like current and non-current, generally current refers to within the next 1 to 2 years, and non-current refers to beyond 1 to 2 years. So this together makes up the total liabilities of the company. Lastly, we have the stockholders' equity, whereby we have the common stock, which basically represents the shares of the company. So this is the total value of the common stock. Retained earnings basically is the accumulated profits of the company from previous years. Now, these profits are still held with the company, and the company can choose to do one of two things. They can either reinvest this money, or they can choose to pay it out to their shareholders as dividends. It's listed under shareholders' equity because this money effectively belongs to the shareholders of the company. So these things add up to form the equity of the company. We see that when you add up the liabilities and the stockholders' equity, it gives you the same amount as the assets. And that's how we get both sides of the scale in balance. So basically, this is an overview of Microsoft's balance sheet. Alright, so that's it for this video. I hope it gave you a good overview and an introduction into how to read and understand a balance sheet. So do like, comment, subscribe if you found it to be helpful, and I will see you in the next video.